What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide a daily pulse at Hemi137 on X. So go ahead and check that out. And before we get started, remember to drop a like. That way we can get the messages out about what is really going on in the market. So, as per the usual, we're going to go over some weekly recap, and then I'm going to go into some earning highlights that I'm watching, some upcoming events that I'm watching, and then we'll get into some charts. Now, that does take a little bit later if you want to look at my charts. I typically do that towards the back half of the video. So just keep that in mind. I do use both technicals, and I do use current events and schedules to keep everything finely tuned in this well-oiled machine. So, without all the jibber jabber, let's go ahead and start off on the weekly recap. Now, we are in essentially the meat and potatoes of earnings. This past week was huge as far as information. They've kind of split up Super Bowl week to kind of dilute it. As this week, we also have some other big earnings coming out this week. Tuesday this week is going to be a big day this week as far as earnings is concerned. And we also got some really, really big events coming on this week, uh, following up what we just currently had. So again, something I talked about, a lot of these earnings are front loaded with information. They try to throw everything at one time in hopes that you don't miss the details, but that's what we are here for, is to try to help you catch the important details and essentially look for what the next thing is that's going to have the most weight. Again, because the market is very dynamic, we want to make sure that we are placing the right amount of weight on what is currently going on. So, with that being said, let's get into some of the earnings that we've had over the past week. We've had some really big earnings. We had Tesla that came out on Tuesday. They missed. I think they missed on everything, I believe. But the thing was that they, just because they missed, they still did well, especially if they're quote unquote considered a car company. They are by far way better than any other car company out there. But with that being also said, they aren't a car company. They are a technology company, and Elon brought that up during the conference call. His forward guidance, again, I think he might have been doing a little bag pumping, to be honest. But people are really concerned about essentially the cheaper vehicle. And I know there was a report that had come out that they were going to stop looking for a cheaper vehicle. Elon followed that up very quickly by saying that that is not the case, that was essentially a lie. Which is funny. People still continue to push that message out there as Tesla continued to roll off until they had earnings. Now we were at a very critical level on as far as technical wise for Tesla, but this popped us right back into that wedge I've been talking about this whole time. So, with that being said, again, the 40 guidance is looking really strong. I think Elon probably was pushing for stuff just to try to help with the stock in itself. I talked a lot about robo taxis and potentially that getting started off a lot quicker than people think. He's saying that the cities are allowing for robo taxis, or accepting it very quickly. Again, it's going to just determine state by state. So you're not going to win them all, but much like Uber and DoorDash and stuff like that started to become a thing, it took a while for it to really take any kind of a meaningful chunk of essentially that market. So, but I think it's very much possible. I think FSD, they don't have the newest chips either, so you have to keep that in mind. As soon as they get the newest chips, considering the massive jump and leap that they've had with these last row of chips for FSD, can you only imagine what the next ones will be? They will have full self-driving in the next GPUs that are coming out. So, with that being said, again, so that popped Tesla about 10%. Meta, on the other hand, fell about 10%, and they did their rap sheet was extremely good. They hit expectations. Biggest concern why they dropped 10% was because of the fact it's really a lot of these earnings are coming down to forward guidance. People are concerned about a recession, rightfully so. And then you got Zuckerberg. Well, even despite hitting expectations and doing extremely well for Meta, they are still sinking billions of dollars into metaverse, and that's very concerning, especially with the current outlook, with a lot of these other events outside of earnings that are going on that are essentially kind of bringing everything that we've talked about here into full circle. That we have been in a recession, and now those numbers are starting to show again, because it takes a very long time. A lot of stuff is very lagging, and it's a lot of pencil whipping. And again, understanding the fact that they even go back and they revise stuff to show that it was an actual recession. They're not going to tell you you're in a recession until after the fact, when you're actually more in recovery mode, or maybe even years later after that, before they do all the revisions. So this is where you can't really typically go off the data. You can use that to your advantage to kind of help move with the momentum of the market, but then ultimately understand, know what your normal yearly cycle is. I talk about that on this channel a lot, and then kind of essentially correlate that with what the current events are and what's currently playing out. And then it helps a lot more into kind of understanding when to put on more risks than other times. So that's why it's very important. Again, can be a lot when you first start out, but the longer you stick with it, the easier it is to get an understanding what's actually currently going on. So Meta did beat Microsoft and Google were extremely strong. Google actually is providing a dividend now. Again, something I've talked about for the past couple of earnings cycles. It's always, at this point, it's going to be AI and infrastructure are going to be the major industry leaders for the next couple of years, because we are in a race to AI against China, and understand how much it can help with our production numbers. A lot of people don't want to work, and people are concerned about robots taking over. Well, the problem is that nobody wants to work these jobs, but somebody has to work these jobs. So we need robotics and AI to take over where that gap is. So again, very interesting what's going on there. GDP. Now, I did mention this last week that it was going to be on there. I said I wasn't sure if it was going to have a big impact again, unless it misses dramatically. And hey, guess what? It missed dramatically. So not only has our GDP been falling, it really fell this past week, and the market took a huge dump when that number came out, and it's since recovered with PCE, which is funny because it raised even higher, and the market jumped back to where GDP essentially, the market opened up before GDP just dropped it. So again, the PCE is a lagging indicator and showing you essentially kind of raw goods and where we're going, right? And understand that things are getting worse. Inflation is crawling up even worse, and that's what the scary thing is we're looking on. I believe it's next week on the 13th. We're going to get the next core, and that's going to be extremely concerning with inflation rising. We're getting into stagflation, essentially where inflation is high, pricing is high, wages are low, unemployment is high. These are big parts of stagflation, and it puts the Fed in a horrible bind. So this whole not soft landing, can't raise rates. The Fed are going to have to lower rates to help take off some of the pressure on what's currently going on. And First Republic actually was closed down. First Republic of Philadelphia was finally scrapped on Friday evening. So just keep that in mind. So we are not, and all these things that are being, again, this narrative that's pushed out there is not correct. And we're starting to see the fallout of everything occurring. And something I've been talking about is accelerating very, very quickly. And I said this would eventually catch up. And when it catches up, it's going to hit everything like a ton of bricks. And so this whole, again, utopic view that's been stated is going to fall apart very quickly. We also had car loan rates jump up to 8%, the highest it's been in 23 years. You have to understand, ever since the financial crisis in 2008, the past decade has really been a lot of free money. Things just go up. But the problem being is that we had the pandemic, lockdown, supply chain issues, print 40% of the money supply. We were going into a massive recession before we even had the pandemic. The pandemic kind of accelerated that, allowed us to print more money. And so now we're dealing the fallout of a recession that should have occurred back in 2000 before essentially what was going on with the pandemic, and understand every about 10 years or so you have a really big correction in the market anyway because you're on a debt-based system, and so everything has just been blown out of proportion, and at this point we need that recession. And instead of trying to keep to bail everything out, we're going to have a big crisis at some point in the very near future. We don't know when, but we're starting to see massive cracks starting to expose themselves because we've been talking about this. You can't it's not an overnight thing. 2008 crash wasn't an overnight thing, right? Like, we had a lot of stuff building up to it. There was a lot of warning flags. I've been giving you warning flags on this channel, and then it will eventually break. And then we need a recession. We need numbers to come down and correct. Florida is a big one. You want to talk about housing in Nevada and Texas as well. They are all taking huge haircuts on properties, and properties that'll soon expand across. As you know, before the pandemic, I think the national average for a house was 215, and now it's up to 400. We need normalization in the market. Everything is so unaffordable. People just can't survive, and that's all because of where rates are where they're at, and the rates need to be increased because of the fact that the inflation was so high. You need to kill demand. This is how you kill demand. It's not a pretty sight. I talked about this even before we even started this whole process going into this, after the beginning of 2022, I believe is when it was. When we started to correct, tech corrected really heavy during that in October of that year. Then it's been essentially rallied us into all-time highs in this year, going into an election year. So now, the one thing that did come out this week as well, Biden's proposing to increase capital tax gain to 44%, which is the highest since 1922. This is one of the most things I don't like to rant, but man, this is ridiculous. This is essentially, if this gets approved, you will essentially have absolutely no chance to make any kind of wealth for your family, because everything is going to have capital gain tax, and they're essentially already taking tons of taxes away, which every transaction that you do always comes with a tax. So with that being said, how much more do we need to be taxed, right? Like, we don't need government intervention on everything. We need to take responsibility. We are not we are not guaranteed things. We need to work hard, right? These are things that I've always grown up doing and learning, is that you want something, you have to work hard for it. You aren't just given things. And with that being said, taking this money from the people that are working hard and then turning around and giving it to programs that maybe you don't agree with, or essentially giving immigrants $2,000 a month so they can keep inflation going, right? It's one of the biggest things. Is a lot of people don't understand. There was, I think, a couple $billion that were given in Visa credit cards to immigrants in New York, and so they're continuing to pay and keep prices high and keep that demand going, pumping out also all the free rent and stuff that was going there as well. So these are big problems and concerns, and what is causing the stagflation, and it will continue to get worse, and it's not going to be a pretty sight. If you thought it was bad now, it will get a lot worse. And so in the next couple months, in the next year or so, I don't know, we're already, like I've always stated, we're already seeing cracks. I talked about this last year. I thought it would have happened last year, but it did not. Obviously, it's hard to gauge those kind of things because a lot of stuff is very lagging. It should have happened a lot sooner, but again, they will continue to kick this can as far as they can, and cast blame on whoever to get people pinned against each other. It's not what I'm trying to do here. And again, not trying to make this political, but again, you ultimately have to understand that a lot of politics play into the economy. And again, that's going to affect supply chains, and that's going to affect the way, these businesses operate and how the stock market moves. But again, the market can correct and price things in very quickly. Again, way ahead of the automobile industry, or even again, the housing industry. So just keep that in mind. So, but again, in my opinion, there will be a big crisis going on, I believe, in a couple months, maybe or so. And then at that point, I've been talking about this all to this point. This is my big buy the dip moment. And then we're going to sail this thing in the sunset because of the fact that if we have a huge financial crisis and we can't recover, the world's just going to go under anyway, right? Like there has to be we want to talk about de-dollarization, you want to talk about all these other things, that's fine and great, but if that happens, things are going to be way worse than what's going on with some your essentially your personal account, right? So just to put that in perspective, and the global tensions and everything currently going on. So again, I don't want to rant about that too much, but essentially that is taking away your freedom with 44% tax on capital gains. That's the only way you can retire. They're trying to take that away from you. And so just keep that in mind. So with that being said, again, upcoming events, interest rate decision, we have that on Wednesday. So not only do we have some big earnings on Wednesday, interest rate decision, not expecting anything, right? If that number moves, that is going to move the market. You have to understand that when you go into a pause, the next move after a pause, whether it's rate increases or decreases, the market's going to sway big because of all the tension you're essentially building up. Essentially, the market is consolidating, waiting on a decision from interest rates, and that is a linchpin. But what we're looking at is Fed Powell will be out, and what is his stance on all the information with the GDP number essentially getting smashed down on Thursday, and then you have PCE, which is climbing even higher, which is even more concerning. So Wednesday will be big when Powell is confronted with these questions. And then on Friday, you have non-farms. Again, very pencil whipped. We'll see what happens, right? We're looking at revisions. Again, at some point, maybe they'll drop the hammer like they did with the GDP number. We don't know, right? That is always a concern. If that number is way off and way worse than what is actually being reported, we could start pricing in a recession, and then we would get emergency rate cuts. Again, I don't see a lot. If it happens, it's going to be very slow. Again, you're fighting against inflation. It's not like you can come out and just drop everything back down to 2% interest rates, right? You have to understand that there's even discussion that inflation, the new inflation, is probably going to be around 3%, not the 2% that they're aiming for. They keep saying that, but you have to understand over time, that inflation rate will continue to go higher. Now, a lot of people will make this, this debate about if it's going to be 3% and go back down to 2. Nonetheless, it is still very, very high. And then again, because of all these, again, this is why politics all play into these things, and they want to continue to not only have high inflation, but let's take away any additional money you may have by putting a 40%, a 44% tax on your capital gains. So you can't gain your 401k, can't even make money because they want to continue to keep taxing it, which is just absolutely absurd. Okay, so the next thing, pivots. Obviously, we have monetary policy next week. On the 15th, we do have core inflation. It's going to be very critical for core inflation, especially after this week when we find out what Powell is going to say. So we got a big, interesting week coming up. Earnings Tuesday. Now, we got a lot of big earnings all throughout this week. We even have McDonald's and all these Starbucks that are on Tuesday will be a big day. So Tuesday, not only do we have PayPal, Amazon, and AMD, we do have McDonald's, Starbucks, a lot of big like value plays on Tuesday. So Tuesday is going to be really big. Wednesday, there's some really good ones in there. I'm not going to list them because there's a lot of like good, like middle to smaller businesses that are in there. But ultimately, again, I'm just kind of looking for the big dogs for this week. As Thursday, we do have Apple and we have Coinbase. We have some other big ones reporting on Thursday as well. So again, this whole week is going to be filled with information. We had a lot of information last week. This week's going to continue. Next week we'll continue with more like headline news as we start getting out of some of the big industry leaders. And then we'll have to wait for NVIDIA. NVIDIA, they kind of again drag out 2 or 3 weeks after this week, just try to stall the market again, because it's all huge play based off of NVIDIA, and they're trying to do whatever they can to make sure that NVIDIA keeps this thing propped up, right? Because not only is it important, and whatever pencil whipping they may be doing, again, to show strength to China, right? This is where the political game comes in. You have to understand that it is still very important for our infrastructure and us to essentially evolve as well. So with that being said, again, big week on deck. Now, expected moves, SPX did come down a bit. It's still a little bit higher than normal. Again, our normal's roughly anywhere, it's roughly around that 60 for expected moves. And then Tesla is a little bit higher, but it's corrected back down again. We're out of earnings, so it is a little high, but Tesla kind of floats around 8 or 9 anyway. Boeing is a little higher. It's not as high as it was, but Boeing's been selling off pretty heavy finally. And then JP Morgan is back to that 4 points, which is about normal for JP Morgan. So now, with all that being said, let's go ahead and take a look at the charts right now. So again, a lot of information that's currently going on. As you can see right now, we had a huge scare this past week with the GDP numbers, which is quite scary. And then we did bounce though. So we did sell off pretty heavy, and then we bounced again coming into this week, especially after a big sell-off. Could be potentially looking, I don't know if this is a head and shoulders play or what this is. You gotta love TD charts sometimes. It's just lovely. But nonetheless, could be this definitely looks like a higher low. So even if we try to run up, I still see us hitting this 51.58 as being our top, and then potentially rolling over and continuing to sell off. I do believe we'll at least see 47 on this one. I think there's enough fear in the market. Now the question is do we start pricing in a recession? It all depends on timing and events that are currently going on. If the Fed start cutting, or if the Fed have to raise rates, which could be a huge problem, there's a lot of fear in the market of the unknown. And I do believe whatever current fear we have is enough to potentially sink us down to the 47. But again, we have pretty strong support here, roughly around the 49.63. We'll see if we can make it back down. You have daily resistance that the market's currently setting on. So if we do break, depending on how we land on Monday, if we drop below this, that can be very concerning. Again, there's a lot of other stuff going on as far as like the reserves right now are very, very low as well. Again, there's a lot of potentially banking crisis things that are going on that could just snap overnight. You can get some news and this thing could just start tanking out of panic. And something that I noticed this is something that I talk about, right, is a lot of times when a major event occurs on Thursday, when we got really bad GDP numbers that came out before market open, when the market actually opened, some exchanges weren't even working. E-Trade was not working. They do this every time. The timing on these things are impeccable. Every time it happens, some of these exchanges, they don't even work. So you can't even execute properly. So with that being said, again, they're trying to prevent panic and people selling or grabbing puts on it. So either one, they essentially add so much into the option that you can't make money off of the options, or they just don't allow you to straight make any trades to profit off of the current move that's going on. So again, very interesting scenario that we're set up. So Monday will really be important. Again, if we can hold above the 5100, I think we can at least go to the 5163 potentially, and then go from there. Again, I think with the current earnings that we got going on, Amazon, I believe, will do very well. Apple, I think, will do extremely bad. So I think we're going to have two very far sides of the spectrum. So again, trying to equal out what's going on. Let's try to do that last week with Tesla and Meta, and then trying to equal it out with Google and Microsoft. So that kind of played out and kind of helped stabilize the market. Again, they're trying to do that again this week. So we'll see what happens there. But very much at a big pivot point here. Now you got Bitcoin. Bitcoin is essentially gathering strength. I do see, again, if some major news drops, I do see this. If any really bad news drops, Bitcoin is dropping with the market. And if it does drop, I can see us diving down to the 47K mark. Um, Otherwise, if the market is somehow able to sustain itself over this next earnings cycle, we could potentially continue to consolidate and then potentially have a massive move up to that 1K mark that everybody's talking about. But right now, this consolidation looks like we're building up for a big move. And typically, for these big moves, you do get a wick down to essentially tag people out, and then it rips to the opposite direction. So I wouldn't be surprised if there was a scare and this thing dipped, tagged a lot of people out, and then ripped up to the 100K. Not saying we're going to hit 100K, but that's typically what happens in the market. And I showed this on SPX multiple times. If you followed me, I talked about this a couple of years ago when we had that turning point. When people were concerned about inflation, it was the same year we had big problems with inflation at 9%. And there was a turning point in which we had Powell. The market sank down to the lowest level, or again around that 3,500 mark, and then we've essentially been up since. And then again, we started headed back down October of last year, only for the Fed to pause. When the Fed paused, the market started ripping back from that point back to new all-time high. So again, we'll wait and see what happens. But I do feel like this thing could sell off one big last time before the rip up, just trying to kind of scare people out. I think is a very strong possibility. So just keep that in mind. Tesla, like I was talking about, it broke under, but it is still back into, which I was expecting it to be back into this wedge. Expecting it to kind of just go sideways, to be honest. And maybe if the market starts to rip, we could see our way back to 200. It may be the lowest point we may get. Even if for some reason something happens, we start pricing a recession, I'm not quite sure Tesla is going to go much lower. Again, the forward outlook for Tesla is very, very promising, more so than any other company out there, in my opinion. But with that being said, we're going to have to wait and see how this does play out. Again, we could continue to chop, but right now, I think we're in a safe zone as long as we can stay around here with everything that's currently going on. As long as we can stay above there, I think we can continue to chop within this range and then eventually break back up to the upside. When, again, I think once we start pressing in a recession and everything, we start actually doing a recovery, I think we're going to have a big boom after that, and there'll be money printing and all kinds of stuff, and the market will go up. So watching that, I want to bring up NVIDIA. NVIDIA obviously is being a big one. We did hit a pretty low here at the 756. Did have a nice bounce after the 20 weekly. We'll see how much of a strength if the market starts to turn over and starts selling off. I do want to get into NVIDIA. I do believe the infrastructure will be very strong, continuing for at least the next 2 years. And then you'll start seeing that transition from infrastructure more into software. And a lot of these big companies that are like your Microsofts, Amazons, Google's, Apple, hopefully, and Tesla, they will start accelerating because of all the AI boom, and then this thing will really start to rip to the upside. So watching that, hoping it can at least come back down again to the 750, potentially break that. Ideally, I would really like it here at the 650 would be optimal, but again, we'll see what happens. Again, we got AMD and we got Qualcomm this week, so we got some more chip plays coming in this week. Let's take a look at Apple. Apple's been getting beat down really, really bad here. This probably actually needs to be down here. I think this has been moved up. But this is in this big buy zone down here. So right now, again, Apple's in a bad position. I think they're going to have bad earnings, and we're going to potentially see a 150 Apple. Now, that's a very strong support at around 150. I might even consider buying some Apple. I think Apple will eventually flip itself and figure something out. But right now, there's a lot of uncertainty around Apple because a lot of these corporations are making big moves, and Apple really hasn't done anything. It really hasn't done anything in years. It's just been more of a kind of a safe haven. So we'll wait and we'll see. But again, I think the bottom of Apple would be 150. I think potentially this week, if it starts selling off heavy, which again, not expecting anything great coming from Apple. We'll see what happens and see if it continues to start selling back down towards that 150 mark. So we'll be watching that for sure. Then we have BA again continuing to sell off. We finally broke this trend that we used to have these long consolidation periods. Now BA is just going off with all the bad news about BA. It's continuing to sell off. Needs to really hold this 160 support. Also, we could potentially see a 120 dropping pretty fast. If it can hold it up and get back into this 200 and 177 range, it could continue to consolidate and potentially break up to this channel. The nice thing is it is breaking into these channels. It is kind of keep it sideways for a long period of time. Obviously, it's been doing really bad as of late. So again, they get one more last leg down. I think that would be good overall. Could potentially see a bottom in a lot of the markets. Big stock names, and I use again BA more so for a gauge on value plays. Now, again, JP Morgan had that big scare when they reported earnings, essentially a forward outlook. So expecting this to make a higher low, expecting this to actually try and keep going down. Again, if the bank starts selling off, everything will eventually start selling off. So it's all based around the banks. Again, you may have a delay in sell off with tech, but ultimately, if the banks are not doing good, especially the big, 5 to 10 banks, that is highly concerning. So, because it's all a debt-based system, so you have to keep that in mind. So, with that being said, we'll continue to watch and see how this does. Expecting it to pull back. Maybe we get another huge sell-off this week. I don't know. Potentially 169 would be where I'd be aiming it next, because we are getting close to that ceiling around 200. So we'll continue to watch that there. But that is everything I have. This video is much shorter today. Again, there's a lot of big news, a lot of things to highlight, a lot of things to digest. But ultimately, again, what we're looking for is we're looking to want to see how this week's going to play out. And so we have this week, we should get a good understanding where the next probably like 2 to 3 months are going to be. That's going to be very critical over the next 2 to 3 months, because a lot of people are suggesting that there could potentially be a big financial crisis around these next couple months. So just keep that in mind. So with that being said, again, if you've made it this far, I appreciate you. Go ahead and drop a like. Until next time, I'll see you guys later.